matatu SACCOs you see. They are a bit different. But very soon you'll see the name changing from SACCOs to TRACOs, transport cooperatives. Therefore, that is the background, and therefore the authority mandated to regulate SACCOs is SASRA, SACCO Societies Regulatory Authority. And again, maybe to mention this, they are not only mandated to regulate a certain societies, SACCOs, they can actually regulate all SACCOs in the country, any savings and credit cooperative. Only that their capacity does not allow at the moment. Therefore, you may ask, how come they are not regulating all? They started with the more risky ones, the forcers, the SACCOs with front offices, then came down to now SACCOs with huge deposits, which need to be regulated. Now, are regulations good or bad? Now, these are questions people ask. They are bad because now they bring a lot of issues here of complying with and so forth. And we shall see, regulations actually are good. Worldwide, wherever you go, even in Kenya, when you look at the banking industry, it's well organized and well controlled by the central bank. And any decision made, central bank is involved. Any bank with an issue, they control, they regulate on how they operate. Because if you leave it today, you may find yourself also getting a loan at even 40% or 30% in a bank. And therefore, those regulations are important to ensure the people who take services from that society or that industry are well taken care of. Now, what are the key benefits of these regulations? One, it improves the society's reputation. How? How does it do that? Remember, the regulator will have a website. Even today, you can visit the website. You'll be able to see all societies which have been authorized or licensed. And therefore, you as a member making a decision, you'll be saying, yes, this is under SASRA. Again, they also publish those reports in the newspapers. The other thing that improves your reputation as a society, that it is well regulated and it can be trusted. If I join, I will not lose my money. I know we have had issues before where you hear some societies have gone down with members' funds and so forth. And that is where the regulator comes in. Again, you'll be able to attract more members. And I usually say a society, a cooperative society, is about numbers. When you are few, you're not able to raise enough to run the society or get enough deposits to give members loans the way they need. And therefore, you find the more the members you are, the better. You are able to, even raising the share capital becomes easy. Everybody gives 1,000 and we are maybe 50,000. That is how much? 5 million. Let her go. Then we have ability to compare with other societies based on reliable and timely information. Because again, today, if I ask the board or the members here today, compare yourself with another society. And I know you will not even have the financials of another society anywhere of your size and say, this society, we are comparable, we are doing better than them, because there is no data available at the moment. However, when you go to deposit taking SACCOs, you will find they have information. There is even a report that was released last month in August. And you can see all licensed SACCOs, their deposits level, their membership, and the key ratios there. And you can make a decision. You can compare yourself where you are. The other thing, it attracts development partners and stakeholder support. Because if you have an NGO or an organization which wants to support the society, even currently where you have various employers, they want a society which is stable and which is regulated, so that they don't support the society, then after a few years, the society has gone under. The other thing is society board become more prudent in governance, because now there is a big brother watching. There are some decisions which you can't make. and therefore it improves the sustainability of the society of operations. Nobody wants to join a society which is not sustainable, which is not growing. You want to join a society which is well managed and well governed and which is sustainable. Even 50 years, it will be there. Now, what do these regulations provide? And especially to you as a member, what do you need to know as a member? What is the key thing? How is it affecting you? One, I just want to clarify which societies currently are coming into these regulations. There are three categories, and one are SACCOs or savings and credit cooperatives with deposits which equal to 100 million and above. When you reach 100 million deposits, those are members' deposits. And currently, I know you are above that as a society. Those deposits, what these regulations are protecting are the deposits. Because if a society was to go under, that is the money which will be lost. Therefore, if they are well regulated and that money properly utilized for the benefit of the members, therefore, it creates a ripple effect to the membership. The other category of SACCOs being regulated are SACCOs which we call digital SACCOs. These are SACCOs which mobilize their membership through digital means, either an app through phones or even a website. And you can join there. You submit your share capital through M-Pesa or another electronic means, and you also start saving through your electronic means. Those ones need to be controlled because as we talk today, the name SACCO is not protected in any law. Anybody can join, can use the word SACCO anywhere, and nobody will take you to court. I can start like Eliud here, Eliud Zola, SACCO. And therefore, nobody will take me to court because the name is not protected at the moment. And therefore, to protect that and to ensure members of the public are not swindled money by these crafty guys, those societies are coming to regulation. It does not matter how much deposits they have. Even if it's 1 shilling, they come to these regulations. Then we have also diaspora SACCOs. These are SACCOs whose membership is based outside the country. The members are in diaspora, and therefore they remit their monthly savings to their SACCOs. And these SACCOs are actually registered in Kenya, and currently there are about 11 of them. And there is need to control them or to ensure they are regulated so that those members who are not in the country, they don't come and find a shell. When they come, they find their society is strong and their money is well invested and well taken care of. Now, Kanisa SACCO comes into these regulations because of the first part. Your deposits are of 100 million. And therefore, the society must comply with the new regulations. The way the regulations are crafted, you have to comply with it. And as Kanisa SACCO towards the end of December, you had over 410 million in terms of deposits. Therefore, you lie in that category of SACCOs with over 100 million deposits. Now, how will these regulations affect the operations of Kanisa SACCO? Now, the first thing, the society will need to amend the name. The name will still remain Kanisa. However, at the end, you have to add either of these two phrases. One, regulated non-withdrawable deposit taking SACCO society, or regulated non-WDT SACCO. This is to distinguish the society from any other society. Remember, we have just said the name SACCO is not protected. Therefore, here we have to now to ensure the society name is protected. So that and everybody seeing the name will know this is a SACCO which is regulated. And therefore, I have the confidence in joining it. Now, the other thing we need to know is the societies will be required to maintain certain ratios in terms of share capital, core capital. And I'll explain because we are not all of us are accountants here. There is something you call the core capital. The minimum core capital for these SACCOs which are coming to these regulations like Kanisa is 5 million. That is the minimum. However, it keeps on growing. That is the core capital. And how does it grow? We can either grow it grows because your asset book, and your largest asset book are the loans. Therefore, as your loan book grows, therefore the core capital of the society must grow. And core capital, it is the share capital plus institutional capital. Share capital is what you contribute as a member to become a member, and that is in your bylaws, and it can be amended from time to time. Then institutional capital is what you retain. Once you do business, at the end of the year, you say we have paid a dividend or interest on members' deposits, and therefore we retain some money, or what you call retained earnings or reserves is what you are calling the institutional capital. And those two give us what you call the core capital. And therefore, this core capital must keep on growing as the assets of the society grow. Now, why is core capital critical for SACCOs? One, it enables societies invest in critical business infrastructure, including premises, and even the buildings you have, the seats you find in the office, the systems you use, the computers which are there, they are bought using this money. It is not your deposit which goes into buying the assets of the society. It is the core capital. And also, if the core capital has not been utilized in buying those core assets or fixed assets of the society, it provides liquidity and the protection from risk of business losses. Because if you have that money lying there in the society will utilize it to give loans and also invest in areas where you can make money. Now, these are the key ratios. The minimum core capital is 5 million, and the core capital to total deposit ratio will be 5. So of the total deposits, 5% should be core capital when you compute that. Then of the total assets, 8%, we have said the 8% of the core capital of the total assets should be core capital. That is the minimum, 8%. It can be higher than that. However, when you increase it, it means you'll have a lot of money which is not going to be invested immediately. And therefore, the largest investment you can have are loans. And also, there is also share capital or to reserves or to institutional capital should actually be 50-50, such that if your share capital is 20 million, then your reserves or your institutional capital should be about 20 million also. So that it is not share capital which should be maybe 50 million, the reserves or institutional capital, it's only 10 million. And keep that in mind because that affects you indirectly as we go deeper. Therefore, note that as we go deeper, I will revisit that one. Then there is the minimum liquidity ratio is 10% of total deposits. Or if we have 410 million deposits, we must maintain 10%. Okay, we must maintain 10% as liquid cash. But that liquid does not mean it's money in the office. It will be invested in short-term investment like fixed deposits, money market, and also in any liquid or call account, so that when the money is required, can be taken immediately. And in this ratio or this liquidity, there will be a report on capital adequacy return to be done to the authority, that is SASRA, every 15th day of the following after every quarter. So that will be done on 15th of January, on 15th of April, on 15th of July, and on 15th of October. So after every quarter, there will be a report submitted to SASRA, although it will be done on a monthly basis. Then capital adequacy, again, they will be required to keep increasing the core capital. This is what I said. Keep that in mind. The core capital will keep on growing to ensure you cover all the risk of the society. And the the core capital can only be grown by two ways. You either increase the minimum share capital per member or retain more of the surplus. There is no other way of growing the institutional capital or the core capital. There are only those two ways. And therefore, as you go deeper, you may find one effect you may have, because the society may be put into task to retain more. Your dividend or interest on members' deposits are likely to go down a bit, so that we retain more, so that with the time you'll even be able to get instant loans without, even if we apply a loan of 5 million, should be disbursed in a day if you are fully qualified, because the society will be liquid enough. And that's the reason you see also banks are being pushed by central bank to have enough liquidity, and it's monitored daily by central bank, so that they can be able to give loans when needed. And also when members require their money, they can get it back. Now, on member shares and savings, the society also will be required to maintain an updated share register and deposits register. This is a register including all the members and showing all their details, their postal address, their telephone numbers, such that if somebody gets that report, can have a picture on who are the members and how much deposits they have, and each has what in the society. And also the society will also be required to be issuing share certificates for the share capital to members, or if not, establish a portal that is on internet where members can now download and print their share capital. And I can tell you what this means. Some of the members may have joined the SACCO and have never informed their spouses. To one point, they don't know whether you are a member anywhere. And therefore, assuming you pass on, what happens? Your family does not know whether you had an investment. But if there was a certificate in the house, they will say, yes, our father here or our mother was a member, and therefore we can go and claim this money. And you'll find, actually, if you go to cooperative societies today, you'll find they have investment, people who left investments there, and nobody knows whether it exists in the family, and they are suffering. Therefore, they will be required to issue certificates or provide a way the members can access. And a member, again here on the share capital, shall not use share capital as a collateral. You cannot use your share capital to get a loan in the SACCO. And I already know that that is in place in the society. And also it is allowed that a member, when leaving the society, can sell the share capital to another member, but cannot be refunded. The share capital cannot be refunded to a member. Remember what we have said, what share capital is? The share capital is used for buying fixed assets. And therefore, refunding share capital to a member, it means we have sold some seats, some computers, some renovations, some partitions in the office, so that you can be able to pay back to that member. And therefore, that money can only go back to the member if the society is dissolved. The other thing is shares may earn dividend paid on net surplus. After we have now declared our surplus, the society can pay dividend. However, the society will be required to have a dividend policy, such that when you are paying, you are basing it on the liquidity of the society, you are looking at the future plans of the society, you are complying with the regulations, so that the members don't suffer. I have seen societies where they pay all the dividend. We make 50 million and we share all of it. Therefore, we don't invest anything back. And then within 2-3 months, we go back to the members again and we start telling them, now you need to pay some to increase the minimum share capital so that the society can continue operating. And therefore, the dividend policy will cure that. And again here, society shall be deemed an withdrawable account. Because as a member, you save monthly. If you don't save for more than 12 months, then you become a dormant member. Although in deposit taking, it's 6 months, and even in banks, if you don't operate an account more than 6 months, you are dormant customer. However, in this non-deposit taking SACCOs, it is 12 months. Why? Because you save monthly, and again, there is no much transaction on day-to-day. Again, any deposits other than sums due to a member shall deem to be unclaimed with the provision of Unclaimed Financial Assets Act. Now, the society now will have to comply with the Unclaimed Financial Assets Authority Act, the Act and the regulations. Now, if you don't claim your dividend within 5 years, the dividend should be remitted to unclaimed financial assets. And even the share capital, we should now say, yes, there is these members, they are our members, but they left and we don't know for more than 12 months and we don't know for more than 5 years. Therefore, we have their shares. And therefore, the families can go to Unclaimed Financial Assets Authority and claim that money, all those shares from there. But the shares cannot be removed. The family can only be told now sell to other members there who are willing. And you'll find even some societies are now establishing a shares trading portal. For instance, I know one society is doing that very well. Like if you go to Safaricom Investment Society, they have a portal where members can trade their shares. Me, I want to leave the society. I want to sell my shares. Then you are able to get a buyer from there, those who are joining. Then on credit risk management, the society will also be required to maintain a loans register showing all these fields, all these details per member. And therefore, it's a big register for any person who has a loan. And it should be able, if the authority, that is SASRA, request for that information, should be readily available. And when you look at this, it requires investment in proper information management system, which will be able to generate these reports in a click of a button. Also, and this other part here is very crucial. As a SACCO society shall not grant any member or permit to be outstanding any loan such that the aggregate amount in respect of that member at any one time exceeds 10% of the society's core capital. Now, members borrowing from the society will not be allowed to borrow more than 10% of the core capital. Assuming the core capital of the society is 5 million, the maximum loan that can be given to an individual is 10% of the 50 million, which is 5 million, to one individual. And not one loan. If you have development, you have a normal loan and an advance, if you get an aggregate of that, should not exceed 5 million. That is very important to note. It's a cap. Because the reason this was put is sometimes you find a member may save a lot of money, up to 10 million, and they comes and says, I need a loan 3 times, that is 30 million. Will the society have enough money also for the other members to get something? And therefore that it's capping that, so that at least every member is able to get a share of what they have saved. Again, intra-SACCO borrowing is allowed. You may find a SACCO may want to borrow from another SACCO, and that is allowed, although it must be approved by SASRA, the SACCO society, the regulatory authority. And also new products must be approved by SASRA before they are rolled out. And that requires a society to do a feasibility study. Why? Because you may find a society, and you must have seen this, a society comes up with a product, but it's not sustainable. Why? There was no money for that. Assuming now, like Kanisa SACCO wants to give mortgage loans to their members to buy houses or to buy land for 15 years. Will that money be enough? Because that money you are giving out will be out for more than 15 years. And will you be able to serve other members? Therefore, that controls that, so that when you are rolling out a new product, then it is well checked that the society can sustain it. And again, a society will not be allowed to borrow from external borrowing, either from a bank or from another society or another financial institution, more than 25% of their total assets. Because that limits the appetite to go out and borrow a lot of money And therefore, you find the members are not saving enough. And if the members fail to pay, the society will be in a total mess because it can't pay the bank loans, and now it has to be auctioned, either the assets and so forth. Therefore, the capping of 25% of total assets. Now, insider lending shall not also exceed 10% of total gross loan portfolio. When I talk of insider lending, this is lending to directors and the staff. When you take the total loan portfolio of those two categories of staff and the board members should not exceed 10%. And why this was put is to control collusion among the board members and the staff to get a lot of money. And then when members borrow, they are told there is no money. Because personally, I've seen it affect some societies, actually here in Nairobi. And therefore, that is checked by that. And also there will be an insider loans report submitted to SACCO on every quarter. And also in risk management, you are saying any security, assuming I gave a land a security, or my car, a security for a loan that I have, then it shall be disposed within a year. If it is not disposed, it's supposed to be depreciated by 25%, so that within 4 years, it's fully depreciated if it has not been sold. And that depreciation means reducing the surplus of the society, so that we don't hold an asset and therefore we just hold it for the sake of holding it. And that becomes what we call non-earning asset. And that there is also a ratio on that. You are not supposed to have non-earning assets. And when I talk of non-earning assets, it's whereby, like a society buys a land. Let's say we buy a land in Namanga, 50 acres, and therefore it remains there. And nothing, we have not developed it, we have not sold it. That is an non-earning asset. And a society is not supposed to have non-earning assets. And also these assets should not be sold to relatives of the board or staff. Therefore, it is controlled there again because of the ability of the directors being able to note there is this asset here. Therefore, I can tip my relatives to come and buy it. It's not allowed. The society will also be required to apply SACCO to introduce any new product or a branch. If, for example, you have more members, you want to introduce another office in Mombasa, Nakuru, Kisumu, or Eldoret or somewhere, you are required to apply for authorization from SACCO. Again, the loans will be classified in this format. The loan portfolio of the society will be classified into performing, watch, substandard, doubtful, and loss. And to just make it simple, a performing loan is a loan which is paid the way it's supposed to be paid. A watch is a loan that has not been paid within 30 days, 1 to 30 days, or one installment because you pay monthly. Substandard is a loan that has not been paid between 2 installments to 6 installments. And doubtful, it's loan that has not been paid between 7 to 1 year. Then above 1 year, it is a loss. And that, on the last column here, you see there is provision. What that means, we take the amount of the loan amount in those categories and multiply by that percentage. The amount we get, we are supposed to reduce our surplus by that annually. Therefore, this is to ensure the portfolio we have, we don't end up saying we have made money, yet maybe many loans are not being paid or they are in default. And therefore, we don't end up declaring surplus, which is not there. Therefore, and on this report shall be submitted to SACCO also on quarterly basis for them to check. On investment, the society again cannot invest more than 10% in land, buildings, and equipment. That means you cannot invest more than 10% of total assets in buildings, land, and equipment, office equipment. And it has gone further to say, in land and buildings, you cannot exceed 5%. And there is a reason for this. When you look in the late 90s, many societies which went under, was as a result of diverting money from the core business of the society, which is savings and credit, to now doing real estate. And remember, in real estate, return takes very long time. It can even take 50 years to get a return in land. And therefore, you end up taking members' deposits into land and buildings, and you end up having members not get loans. And that leads to now members now start moving one by one. And once the society has members leaving, the society starts now going down. And again, donated assets and foreclosed assets are excluded in arriving this percentage. If you have a donation from a donor, then you don't need to include when computing this ratio, because it's a donation. You just add it to your assets. Again, the society shall not invest in non-government papers or security of more than 40%. Assuming now we have, for example, the housing society or an investment company, we cannot have more than the investment in that company should not be more than 40%. Combined, also buying shares, for instance, you may decide we need shares as EIC, we need shares in Coop Bank, and also shares maybe in somewhere else or in a stock market, then should not exceed 40%. However, you can invest 100% of the core capital, the excess core capital that you have, because already core capital has been consumed in other assets of 100%. You can put in government paper, that is in treasury bills, in bonds, and any other government paper. Investment return will also be provided to SASRA on quarterly basis. Now, the society again here will be required to now appoint an internal auditor, because currently you have been relying on the external auditor who comes and checks your books on annual basis and before the report is presented to the AGM. And therefore, the internal auditor will be a resident of the society. If not, if the society cannot afford, then we'll be required to outsource the internal audit functions from a company or from a qualified accountant who has a firm that can do that work. And through that, that external audit firm must be approved by the SASRA. Then you have supervisory committee at the moment, and the role of a supervisory committee in these regulations has been elevated to also include the audit committee. When you go to FOSA SACCOs, the SACCOs with FOSAs, you find the audit committee is part of the board. It's not part of the supervisory committee. And therefore, in these regulations, because there is no much risk or much business like where we have FOSAs, the audit committee will be the supervisory committee. And therefore, the role is also very much well spelled in the regulations. Again, the board shall not meet more than 15 times in a financial year, and not more than 2 months shall lapse before meeting. Therefore, a society can meet minimum of 6 times in a year, but a maximum of 15 times. And this is to control where it has been found some board members create many meetings so that they can get a good allowance. And therefore, and that has been observed in other SACCOs, which even sometimes they go under, because you come and even prepare the books and you find the directors are earning what the loss that the society has made. And we have even seen with some listed companies. Again, the society shall not have more than 3 board committees. The society is only allowed to have 3 board committees, subcommittees, not more than that. Although in this one, the supervisory committee is excluded because those members are elected by the AGM. But the mandatory committee here is the Credit and Risk Management Committee. This is mandatory. Now the society, the board can now decide on other 2. For instance, they may have Education and Business Development Committee, and maybe another committee for finance and administration. Finance to tackle the finance issues and the staff issues. Then all directors will be required to fill what we call a fit and a proper form. When you are applying for the authorization or license from SASRA, the directors will now be required to fill a form indicating the academic qualifications. It's like your full CV, even where you went to school, where you are a director. If it's a company, if it's a society, another society, then the SASRA will vet you to ensure you fit. Because if you have been a director in another society that failed, you will not be allowed to be a director in another society. And that's how it is, so that there is proper governance of the societies under these new regulations. Now, the societies under these new regulations will also be required to develop key policies, and these are the key policies which the society is supposed to put in place, so that no decision will be made out of, can we just do something here like this? There will be a guided way. If it's credit, human resource, investment, dividend, risk management, liquidity, finance, information preservation, savings, board charter governance, and communication, disaster preparedness, and so forth. And also key other documents are procurement. We know what has been happening in many places in our government, and also anti-money laundering. We have heard about it, cybersecurity, customer service charter, and also operating and internal controls. Those are others which are also very crucial for the society to have. Now, the society can also be punished by the authority if they do some of this willfully and continuously fail to comply with the directives of the authority. If the society does abandon its core business, now you start doing land, yet your savings and credit, and also if you are not capable of coping with severe financial problems, assuming you have a liquidity issue and you are not able to sort it immediately, then the society can also be suspended or put under statutory management. And also if financial malpractices which leads to erosion of the core capital, and also if a petition has been filed for winding up the society by even a section of membership, therefore the society may be put under statutory management. Again, the society will be required to put in place a robust management information system with all these features. There are a lot of features about it which should be to ensure so members are served well and the data is well protected. Again here, when the regulation commences, every society will be under these regulations will be required to carry out will be required to apply. There will be no excuse. That's how the regulations have been set. And therefore, within 6 months, after the regulations commencement date has been set, all societies under these new regulations should have applied. If not, there are sanctions. And those sanctions may apply even to directors as individuals for not taking the action of applying. The other thing is financial implication. Every society will be required to apply. The fee structure is as indicated here. The application fee is 3,000, and there is one of 50,000 first application to get the authorization or the license, and 30,000 for annual renewal. And if you have a branch, it will be 10,000. These fees are now actually what runs the regulator. And there is one thing I want to make clear. When we talk of these fees, it's not only the society which is paying, all the societies which are under these new regulations will pay, so that the regulator will be able to operate. And when you look at any other regulator, even in the world, in Kenya and everywhere else, the regulated are the ones who support the regulator. Like even central bank, the banks pay the license to run central bank, and we pay all the fees. Insurance, the same, insurance regulatory. The pension schemes pay for retirement benefits authority and so forth. Now, if the society does not comply in any of the sections, there are key things that may happen. For instance, the public may be notified the issues, and also the bankers, where the society banks may be told not to receive any money, and also a notice can be put in the newspapers saying this society is no longer allowed to collect money, and also initiate appropriate enforcement actions against the officials of the society for not complying. Now, what does the society need to do is to train the board, because if the board is not trained, then they may not understand the regulations, the staff and also members. And that's what we are doing today. And also develop and review various policies, and also review the society operations, like processes, ICT, and even employ, like you have said, you need an internal auditor. Then also review the bylaws. You see the name need to change. And also some sections, if they are not in compliance, for example, you may have said we'll have 10 committees or 5 committees of the board. Now they have been restricted to 3. That should be aligned with the regulation. Then review the strategic plan, and also develop a business plan, because when you're applying for this license, you need a business plan. And also review of the annual budgets, because you may have done a budget and these regulations have come on board. So what happens? May need to review. And you as a member, now you have understood what it will entail. Therefore, it's for you to now support the directors as they implement these items. Good, that was my first session. I just now want to go very fast. Those are the regulations. There are also, what is your role and responsibilities as a member of the society? I just want to mention a few things here. One, as a member, is to control the society. You elect the directors, and that is one way you regulate how the society operates. You make key decisions during the annual general meeting, and therefore that's one way of also controlling. And you approve the budgets, you approve honoraria for the directors and so forth. Therefore, that's one way you control. Another one is patronizing society products and services. And this is where I like hitting some of your members here, because this society, you may find members saying, I have some money, but I will contribute very little to the SACCO. All the other monies goes to a bank somewhere. You have invested in a bank because you trust the bank so much than your society. And you contribute the minimum. Yet, you are saying you are a member and you don't even patronize the products or services of the society. Then why did you join? It's very important. And as I am talking this as also a member of my own SACCO, and also not only a member, and also a director, vice chairman of my housing society, and also working for a bank. It's very important that you patronize your society products. They are there for you. And I usually ask this, when you take the money to the bank, most of you, if I ask, have you ever met the MD of that bank? You have never. And you'll say, I'm a member. I bank here. This is my bank. Now, but very little you take to your society. Yet you are the one who is responsible for electing the directors and controlling the society. Very important. Patronize your society products. Those products are placed there by the board and for those so that you partake them for your benefit. And also keeping informed and introducing new members. I know this is another area where I've gone into many circles. The role of introducing new members to the society is the role of the membership. It's not the role of the directors. Directors will control the society, come up with strategies on how to grow it, ensure the society is well run. Now, they don't know where you work properly. You are the one who knows who is next, who is a member, who is not. And if you don't introduce new members, do you know what comes to you next? Who will guarantee your loans? Because if you have not introduced a member, you cannot go anywhere saying, members, can somebody guarantee me? You can't be guaranteed by anyone out there who doesn't know you. And yet, you know, it's very important also, you know, when you are guaranteeing somebody, you are saying, if he or she does not pay, I will pay. And it's very, very painful when you are paying loan for somebody whom you guaranteed, yet you can't trace them where they went to. Or when you call their phone, they can't pick. Therefore, it is good that you introduce members who you can guarantee, and you can also can guarantee you, can guarantee them, and that ensures you grow the society. There's something here you can do. Actually, you can, if you have a strategy of every member, can you introduce just one member in a year? Just one. If you are 8,000 or 3,000, you may find doubling the membership in a year. You'll have more deposits, you'll have more people to guarantee you as a member. Therefore, it is your responsibility to ensure you bring new members to the society. Again, supporting the board proposals and implementing the AGM resolutions. If the board says now we need to increase our share capital, it's your responsibility now to support that so that the society can run. Again, attending society meetings. I don't know how many I've attended at the moment. I can see we are about 102. This society has many members. Do you know what will happen? They are the ones who are going to be calling you. Hey, how was the meeting? Yet they would have attended. Now it has even come to your desk, to your phone, to your laptop where you are seated. Assuming now you are being called for a meeting. I think if this meeting was a physical one, we would be less than 50. Therefore, it's good that you attend meetings, because when things are said, you will not be asking, who said that? Who was there? It's because you don't attend those meetings. Very important to attend society meetings so that you get informed and you get first-hand information. Not sio ile imepinduliwa ikapinduliwa before it reaches you. Then keep realistic expectations. Don't always say, what can the society offer me? Always ask, how can I support my society so that it can support me? Because if you don't have enough, the society will not give you enough in terms of loans. If you don't take those loans, the money will be taken elsewhere to maybe in a fixed deposit and get 2-3%, and you will expect high dividend. Where will it come from? Again, remaining a loyal member, not talking positive about your society. Don't go out there. You want to recruit new membership and you are saying, hii society yetu imenishinda. I don't know how I will keep on remaining. Yet, you want to attract more members to the society. Yet, you are still a member of the society. Talk well about your society, be loyal, and introduce new membership. Those are key role and responsibilities of a member. Now, this one I have to say, I will be able to touch some of you. How you behave, how some members behave in the society. One, ignoring to turn up for education days. Then tomorrow you'll start asking, now what happened? You don't know even the products offered in the society. Okay. Very important to turn up for education days. And why? Not only education, all meetings. Why? You will be able to get friends, make friends, and you'll be able to get guarantors. Right? That is one key thing you can get in a meeting, and also understand the products of the society and where it is headed. Again, taking products that you do not fully understand. You take products and you don't understand them. And then later you start saying, how come the deduction is so high for this product? Because when you are taking the product, you did not scrutinize the features of that product or that loan you are taking. Again, waiting to be called so that you pay or to get debt collectors, you leap a loan. That's another issue you should be careful with, because you may find you have not paid your loan. It's always, if you're not capable of paying your loan, there is an issue. Visit the society and express yourself and come up with a plan. Don't hide. Also, disrespecting your fellow members, staff and board members. Like I've gone to some societies and you hear some members saying, unajua ni sisi tumewaajiri hapa. Napasa nikiingia kwa hiyo ofisi mnasimama. You know, that is disrespect. And it's very important that as members, we behave well and respect others. Or you even going to an AGM. I've gone to some AGM where you find members coming drunk. And therefore, nothing can happen in that membership during that meeting. And also condoning fraud, that wamenipatia loan lakini hawajajua, so I will not inform them until they realize. And also in discipline and the bad governance. Those are some of the things you should avoid. And also giving the minimum when you can afford to save more. And let me highlight, this occurs a lot. You can save 5,000, but you say, hii society yetu hapana, siwezi patia pesa mingi, wacha nipeleke bank, hii ingine niwapatie the minimum. Again, reducing your contribution when you get a big loan. I've seen whereby members save maybe 10,000. After reaching maybe 500,000, they get a big loan of 1.5 million. And now they say, now reduce my monthly saving to the minimum, to the 2,000. Now the question will be, how will other members get loans with that minimum? And actually I've advised Men Society, and this you may find it coming. The societies now come up with a way of getting more money. One, the society can decide to go and borrow elsewhere from a bank. In a bank, they will be given a 13%. Now, what rate do you expect them to lend to you? It must be higher. And the SACCO says it has to be 2 points above. So you'll get it at 15 or 16%. Again, the directors may say, now we have to do it internally. How do we do it? We come with a graduated scale. If you want to get a loan, we have to look at your monthly saving. If you are getting a loan below 100,000, then your minimum contribution should be 2,000 per month. If you get more than that, 200, it goes to 2,500. So as you get a bigger loan, your contribution also increases. Again, putting a larger portion of saving in banks. You have already said that. And yet you don't want to support your society. And also asking board members to go for money elsewhere. When you can give, really, you can save more as the members. Why do we need to go to the bank, which is more expensive? Again, shooting down AGM proposals. But AGM, before a proposal is brought by the director to the AGM, it must have discussed and agreed. Then remember, the directors are your representatives. You are the ones who have elected. Then you come and shoot down the proposals. There are consequences to that, and you'll see. Also, being part of the problem, you are not providing a solution. You always say, no, this one, no, we can't accept this, and so forth. So what happens? And also making unreasonable demands. For instance, saying, we need a dividend of 12%, yet you are lending at 12%. Let me tell you, there is no society that can pay a dividend of more than 10% when lending at 12%. I can tell you. There is no way, because there are costs involved. And I've done that, and for you even to pay 10%, lending at 12%, you must be the most efficient society. You may have only 1 or 2 staff, and you are using technology to reach your membership. That's the only way you can achieve even 10%. Therefore, let's make reasonable demands and understand how the society is operating. What is the impact of our behavior? Unstable or limited capital base and deposits. Perennial liquidity problems. Then we start saying, ngojea loan yako utapatiwa after 2 months. Because we don't have enough money. High dependency on external borrowing. Then we find you are paying very high interest to banks or other financial institutions. Also growing bad and high risk loan book. And increasing provision for bad debts. And remember, when you are doing provision, it is going to reduce our surplus. Inability to generate surplus again. And also pay dividends. And again, disgruntled members of staff and the board. You may find even some board members resigning, some staff. And that is how we don't grow a society. And again, the ultimate collapse of the society. Therefore, your behavior as a member determines where the society will go. So what have I told you? 1, why the regulations were introduced, the implication of the regulation to the SACCO, it's for you to support because it has financial implication. Again, how will members be affected by the regulations? You have seen where you are coming in, because the society will be strong. Again, you'll also need to chip in and support your society. Also, changes in the governance structure. We have seen now we have only 3 board committees. We need internal audit. There will be clear roles for every member of staff and also the committees. And the steps being taken, the management, the society are very key. What they need to do, I've just highlighted that. And also the behavior of some members. Kama umenguzwa, rekebisha. I don't know whether you are one of them who has been affected or not, rekebisha, so that the society can grow. Thank you very much. And that is the end. I want to welcome Carol for final comments. Thank you.
Thank you very much, Eliud. That was quite enlightening and detailed. Also considering the regulations are 87-page, is an 87-page document, but you've been able to break down that in within a very short time. So members, I hope we now understand what is entailed in the regulations and the benefits, how you're going to benefit from these regulations. For me, my biggest take home is that regulated organizations are professionally run and they are also more profitable. If we look at the financial services sector, we have banks which are regulated by central bank. We have microfinance institutions also regulated by central bank. We have insurance companies regulated by IRA. We have stock brokers who are regulated by CMA. And also we have pension schemes who are regulated by the RBA, that is the Retirement Benefits Authority. And if you look at these organizations, they are quite profitable and very well professionally run. So in the long run, you stand to benefit as a member by having an increased return on your investment and also by getting more efficient services, especially because of the MIS that is required to be installed by the SACCO and the reports that the board will be required to send to the regulator. So that can only translate to better services to you as a member and an increased return. However, for us to get there, there are a number of sacrifices that we may need to make. These regulations may affect you financially, especially in the area of share capital. You may be required, you may be called upon to increase your share capital. There could be instances where the board members will come to you and tell you that the dividend that you are expecting to get has gone down because they have to retain part of the earnings for them to be able to meet the capital ratios. So we hope you're going to cooperate, but also for you to be able to assist the board in growing the share capital and the core capital ratios very fast would be to bring in new members, because new members will come in with new share capital. They'll also come in with new deposits. They will borrow, so the SACCO is able to make income. And also to increase your deposit for the SACCO to have good liquidity ratios. When it comes to credit management, you realize that the loan book is supposed to be classified based on the way the members have been paying. So it's upon you as a member, ensure that you pay your loans on time. Ensure that if you guarantee somebody, do a due diligence on the member that you're guaranteeing, because it's going to affect the books of the society. When it comes to the provisioning, the more loans the SACCO has that are in arrears, the more they will be expected to provision. And that translates again to the bottom line. But the good news is that the regulations will ensure that the SACCO has a good loan book, and they will be more aggressive in collecting debts which are outstanding. Again, Edith has mentioned about decision making. There's some decisions that you may be required to do as a member to be able to assist the board comply with the regulations, and one of them could be approval of the budget, because there are new items which have come in which had not been anticipated when the previous budget was being made. For example, the licensing fee, which had not been taken care of in previous budgets, they will be required to come up with new policies, which will require some money to do it, and a number of other things that they may need to do. So when they come to you with the budget, please support them, because that's the only way that you'd be able to comply with the regulations and also comply very fast. We can go to the questions. Nelson, I think you will assist me in going through the questions. I see there's some questions which are for the SACCO, meant for the SACCO. So you're going to assist me pick out those ones, and then I will pick out the ones which are for us, so that we can respond to them.
Yes, Caroline, I have been extracting some questions, so let me just put that up in a slide right now, then we can go through them one by one. Okay, so these are the questions that have been coming through. So Caroline Ochieng asks, can the SACCO help me sell my share capital? I'm willing to sell at a discount. I think as Eliud alluded to, and I think this has always been a practice for any member who is leaving the society. I think the SACCO has always done its best to assist the member to be able to transfer the shares. So this is something that you can always reach out to the office, but we are not encouraging you to leave. So please continue staying with us, because we want to grow together with you. Boniface Minor asks, how many non-deposit taking SACCOs have 100 million deposits and above in Kenya? Maybe Caroline or Eliud could respond to this.
Okay, I can respond to that. Currently, it's not known, because many have not been filing returns with the ministry, and they are estimated to be about 400.
Okay, thank you. So Kanisa SACCO is among the approximated 400 SACCOs that are going to be affected by these new regulations. Next, Robert Akombe asks, is it necessary you as a board, as board members, when borrowing from other societies or banks, to let the members of the Kanisa SACCO know that you're doing so? I think this is well captured in our budgets, where we under annual resolutions passed at every AGM, where a borrowing limit is set for the society, and this is actually determined and approved by the AGM. And in any case where the society has to borrow, then the board has to report back to the members that this is the reason why we borrowed, and of course the decision has to be ratified by the members at some point. I don't know whether somebody would like to make an additional comment on this. Thank you. But one thing we are glad about is that Kanisa SACCO has not had the need to borrow externally. We are liquid enough, and we can be able to take care of our business as we are. Angelina Okola asks, what are the compliance timelines for a SACCO once they have registered with SASRA? Eliud?
Yes, the SASRA should be able to publish, not to publish, but set the date for the commencement of the regulations. Once the date is set, like today, within 6 months, any society which is within those regulations should apply. Then after applying, you are only given 1 year to comply 100%. So therefore, it's better to start early, because the 100, you remember deposit taking SACCOs were given 4 years. Now, the non-deposit SACCOs are being given only 1 year after after applying.
Okay, thank you, Eliud. Next, Chemtai Moses So it's allowed to guarantee each other in the same circles? I think that is the model upon which the society is built upon. So when you want to borrow, and as our products specify, you need someone to guarantee you for the amount that you're taking, unless you are borrowing within your free deposits and you're using that as to guarantee the loan that you're taking. So yes, and we guarantee each other in the society, and that's why we need to continue building our networks among other members, so that you create, you build trust, so that whenever you want to borrow, you have people you can go to guarantee your loans. Boniface Mwanzia asks, members will be forced to increase their share capital. Will this not affect negatively the new members? Elliot, do you want to take that?
Okay, that's okay. No, it will not affect negatively. What happens is that the society should come up with a progressive way of the members. For example, if you set the share capital to 40,000 a member, that amount is not payable at a go. The member can build, the society can come up with a way of growing it on monthly basis. And that is the best way. Even I would propose to SACCOs, because the core capital of the society will keep on growing, such that you grow it slowly. If you save 3,000 a month, then maybe 100 goes to the share capital, and it is monthly. So that you don't reach a point where you are telling members, now we have to increase our share capital from 20,000 to 30,000 at a go. That will be a bit hard. But where you have a way of growing it slowly. If it's a new member, can be told for you, you have to comply within 1 year, pay the 1,000, 1,000, 2,000 or something to comply. Thanks.
Thank you, Eliud. Christine Onyango, very informative, thank you. Is it possible to kindly share this document by email? Yes, after the meeting, and maybe by Monday, we will be able to send out the presentation that Eliud has shared with us, as well as the recording for this particular meeting. So you'll receive that in your emails. We have a couple of other questions on the chat, and I'll just read them. Eric Maumu asks, let me start with Winnie Mugane. Winnie Mugane asks, with the new regulations, do we need to wait until next year during AGM to pass this?
Okay, if I go for it, no, you don't need. You don't need to wait until next year, because the whole thing, there is nothing you are passing at the moment. It's only when there are key things that require the AGM approval. For example, amending the bylaws. And also, if you have even coming up with a budget, you can do a special general meeting, maybe to adjust the budget, because maybe it had been passed and now there are new things that need to be done. Therefore, it is not mandatory to wait. There are those which can be done now, there are those which can wait. But if, for example, the regulations are passed, the regulations are commenced today, then there may be some things that need to be approved by the AGM to move forward.
Thank you. And maybe just to also add a voice there, I think as a management, there are certain steps we've already started taking towards pushing the society towards compliance. And shortly, we are going to be hearing from the chairperson what some of those steps are. Another question, Eliud mentioned that this is from Eric Maumu, that if you fail to collect your dividend, it will be pushed to the Unclaimed Assets Authority. So can one claim the dividend later on?
Carol can assist me there.
So how the Unclaimed Financial Assets Authority operates is that they've given timelines for financial institutions to be able to remit any money that has remained unclaimed over a period of time. So this forces the financial institutions to first trace the owners of those assets before they can be able to remit that to UFA. So I want to imagine that the SACCO, before they take your dividends to the UFA, they will look for you as a member to ensure that you come and claim your dividends. The other option would be for them to put the dividends back into their share capital, because share capital keeps growing, and that is a terminal. I would say it's a terminal fund that may not require to be declared as unclaimed assets. So that's one way of looking at it. But if for any reason the SACCO is not able to get you, for you to come and claim your assets, and the assets are remitted to UFA, then you can go there and claim your assets. So when the SACCO does the submission, they are going to have to also share a list of the members whose the assets belong to. So once you go there, they already have your records. You produce your identification, and you will be able to access your assets. Thank you.
Thank you, Caroline. Another question: if you buy the extra shares from another member who wishes to exit from the SACCO, of what benefit are those extra shares to someone considering you cannot use them to guarantee a loan or withdraw? This is from Esther Salama. Eliud?
Yes, a very good one, Nelson. Now, if you buy extra, remember, share capital cannot be refunded. The only thing you can benefit by having more shares, you'll get dividend if it's declared. That's a key thing. And again, with the time, you may find yourself able to also sell the same shares to somebody else in future, maybe, when the society has actually improved in terms of performance. Therefore, and I know there is something being worked on with the time to have even some SACCO shares listed in the stock market. And therefore, it will be an opportunity for such shares to be traded. But you'll be able to get not loans, but dividend. However, you cannot use them to guarantee or to get a loan based on them. Remember what I said, share capital cannot be used to guarantee a loan.
Thank you, Eliud. I think we are coming to the end of these questions, and then we move on to the next presentation. We are 14 minutes away from our time, but just to quickly run through, this one is interesting. Mark is asking, Eliud, do you have your own SACCO? Can you send us a link to the website?
Thank you. I can answer very fast. My own SACCO is CoBank SACCO, and the membership is only from CoBank. Currently, it has not opened up. Therefore, we don't have a website. Everything is internal.
Thank you. Thank you. At least you're not taking away our membership. Why can't we start using a collateral, e.g. title or vehicle loan book to secure loans? Evans Kirui, please see the office. This is ongoing. So just reach out to the office. Because of COVID, loan amount had been capped. Has this changed, Dorcas Kiplagat? Yes, the management has continuously reviewed this. So please reach out to the office to know what the new position is. Jane Kibu, there is a Kanisa app that requires one to have a line that is registered with M-Pesa. Those in the diaspora can't access it. How can we be helped to register and use the app? Thank you, Jane. This is a very good question. And while we were launching the app, we actually launched 2 platforms. So we have the mobile phone app, and we have the web portal. So from the web, for the web portal, you don't need mobile phone activation. You just go into the portal and you register yourself, and you'll be able to get the credentials sent to your email for you to just log in and view your statements, check what the transactions are, the balances. so that you can keep abreast with the activities on your account. But for the mobile app, you'll need to register, and currently it's requiring you to have a mobile phone line. We've not activated numbers in the diaspora, but we are working with the developers to have that issue sorted. Okay, great. So thank you very much, Eliud. Thank you very much, Caroline, for taking time to take us through these regulations and what they mean to us. I'm sure that we'll continue engaging on this. And just to ask members, if you have any further questions, please don't hesitate. Reach out to the office and we'll be able to assist with answering all of those questions you may have. So moving on to the next session, I would wish to invite, let me stop sharing this screen. I would wish to invite the chairperson of Kanisa SACCO, that is Madam Anne Kioi, who will take us through some of the steps that the management has already initiated towards ensuring that as a society, we are among the first one to comply with the regulations once the commencement date has been gazetted. So Anne, over to you.
Thank you, Nelson. Thank you, Eliud and Carol, for taking us through that very informative session. We appreciate your presence. I would start by recognizing the presence of our supervisor from the State Department of Cooperatives. We are joined in this Zoom meeting by Mr. Njoroge, who supervises us and who has been working with us through this process. And we are happy that he's able to be with the members as we conduct this education day. I'm going to give you an update on what we have done as management, what we have done so far in order to comply with these regulations, what is planned, and also what should members expect. I'll be going through some few slides that will be displayed on the screen.
Sorry for the technical hitch, but we should be having the slide right now.
So there are the slides that I'll take you through briefly, the steps that are being taken by the management towards compliance. The management is pleased to inform you that we have positively welcomed the recent changes that have taken place in the SACCO industry, and at the same time we have noted the impact that these changes will pose to Kanisa SACCO and to our members. We are happy that Mr. Eliud has been able to inform you and to take you through what is happening, what is going on, and what is expected from you as members, at the same time also what is expected of us as leaders of Kanisa SACCO. We have done an assessment of what it entails if we are to comply with all these regulations, and I hereby want to share with you what we are currently doing. We have organized internally ourselves by, as Mr. Eliud mentioned, that recently he conducted a training of Kanisa SACCO board members and staff to help us internalize and understand the importance of these regulations and what is expected of us. And we have done what is called a fit and proper test of our society and ourselves as leaders. Some of the areas that we have looked at are as follows. We've looked at the qualification criteria, as Mr. Eliud has alluded to in his presentation. He's also talked about the licensing procedures that will be required to go through. We have looked at the capital adequacy ratios, and in my next slide, I'll be sharing with you the ratios as we stand and where we stand. We have also looked at the liquidity management. in credit risk management, investments, financial reporting, information security preservation, business continuity, and governance. And at the same time also, we've looked at our human resource capacity. So under capital adequacy ratios, as you can see there on the screen, as at 31st of December, this is where our society is and this is where we stand. Currently, we are at 484 million in terms of our total assets. Our members' deposit stands at 397 million.
Just go on.
The share capital stands at 17,525,473, and our reserves are currently at 9,442,000. We also have looked at our core capital as at 31st of December. We are at 26,968,461. Money market investment, as at 31st December 2019, we had invested 28,776,770, and our total cash balances, we had 38,685,876. Land, building, and equipment, we stand at 1,367,000, whereas our loan portfolio stood at 426,770,259. When we look at the SACCO requirement vis-a-vis our capital adequacy ratios, we've looked at where we are standing. When it comes to the core capital to deposit ratios, we are currently at 6.8%. As you've heard in the presentation, the minimum requirement is 5%. So when it comes to that category, we're already within requirements. Core capital to total assets, we are at 5.6%. The minimum is 8%. So as members, you can see here, we are below requirements. And the solutions that we're going to be proposing is that we want to build the share capital. When you look at our share capital to reserves, which is expected to be at 50-50 or same as 100%, we are as at 31st of December, we were at 53.9%. So here also we are below requirements and will be required to build the share reserves. Total loans per member, as at 31st December, we had the maximum is 10% of our core capital, which currently is equal to 1,752,547. That means in our society currently, a member can get 12 million through various loan products that we have, which is equivalent to 71%. So as we stand here, we are below requirements and we'll be expected to build our share capital. When it comes to external borrowing, maximum we are expected is 25% of our total assets. That means we can borrow up to a maximum of 48,418,350. Currently, we are at zero, as you've heard from the education chair. We have not had the need to borrow externally, and here we are within requirements. Insider lending, as it was alluded to in the presentation that we've just had, maximum we can do is at 10% of our SACCO loan portfolio, which currently is 42,677,025. Currently, our insider lending stands at 11,621,938, and here we are within requirements as at August 2020. The next area is investment in land, buildings, and equipment, where we are required to have a maximum of 10% of total assets, which in our case is 48,418,350. We are currently at 1,367,607, and here we are within requirements. We have also investment in land and building, where we are required to have a maximum of 5% of our total assets, which should give us a maximum investment of 24,209,175. And currently, Kanisa SACCO has not invested in any land and building. So here we have zero, and we are within requirements. Lastly, when it comes to this requirement, is financial investments in non-governance securities, including investments in equities, collective investment schemes, bonds, commercial papers and notes or derivatives, or equities of a subsidiary or a related entity. Here, Kanisa SACCO can invest up to a maximum of 40% of our core capital, which is 10,787,385. Currently, our investments, which is mostly in the money market, as at 31st of December, we had 28,776,770. And this is investment which is more than the requirement. For us to be able to maintain this pace, as you know, as what we have always presented to you at our AGM, we also invest in the money market. And according to SASLA, by 31st of December, we had overinvested. But to solve this problem, we'll be building the share capital such that our investment in the money market is not affected. The steps that have been taken towards compliance, as you can see now from the above analysis that we have done, we have noted that most of the ratios are within requirements, and where we have deficits, we need to work on building the share capital and reserves in order to achieve the expectation as expected by the SASLA regulations. You've heard from our presenters, they talked about policy development. We have looked at the policies we have at Kanisa SACCO. The regulations requires that the society have 15 policies in order to comply and be regulated. At Kanisa SACCO, we have 10 of those policies already in place, and we'll be developing 5 policies only. These have been categorized as follows. The ones that we currently have and will require policy review are 10, namely we have a dividend policy, we have an information preservation policy, we have a credit policy, we have a human resource policy, we have an investment policy, risk management policy, finance and accounting policy, elections and vetting policy, ICT policy, and liquidity management. All these ones are in place, and what we need to do is to review them to ensure that they comply with what is stated in the regulations. However, we will be expected to develop 5 new policies so that we are able to comply and be regulated. And these are the savings policy. We need to develop a board charter, communication policy, disaster preparedness, and business continuity policy. We also expected to develop a business plan and also do a feasibility study. We are also doing a human resource review, staffing requirements. That means looking at our staffing requirements as stipulated in the regulations. You heard our presenter talking about even the provision for an internal auditor, which we don't have currently. So those are the areas that we're looking at to see the current human resource that we have at the SACCO and how it fits with what is required or expected of us by SASLA. And finally, organizing today's education day or education session to educate you members, to inform you, and at the same time also to prepare you members adequately. You've heard one of our facilitator, Carol, talking about the decisions that we bring to you, such that you make decisions from an informed point of view. You've listened, you've learned, and also you've been informed, such that when we come with these decisions, already you're aware of where we're coming from. And as Mr. Elliott has mentioned, as a member, you know what is expected of you. What will be the impact of the expectation of what we are expecting? Our members, these regulations, we have embraced them. And we expect that also our members, they are going to embrace the changes and cooperate with the management, as these changes will come with costs, with additional costs that the society will have to bear. You've heard our facilitator, Caroline, talking about the financial implication, talking about the costs that you're going to see in the budgets, which were not there previously. We know you'll be asking us, what are these and where are these costs coming from? That is why we want to inform you that these regulations, they're coming with costs. You've heard also from the presentation by Elliot, he alluded to some of the costs like application, which is 3,000, license 30,000, all those costs, you find them in our next budget, and definitely they're going to affect us. These costs, you're also going to find them whereby when we revise the budget or when we present the budget to you at the AGM, it is our expectation, as Carol has said, you'll be able to support the decisions that the management will be coming up with. we're also going to be expecting that we're going to comply with the ratios that are required. You've had our facilitators have answered some of the questions that it's not going to be paid at once, it's going to be progressive. So as we implement these regulations and as we comply with them, some of these decisions are going to be undertaken progressively. And as we'll be proposing some of the strategies, which are the decisions that we'll be coming up with at our next AGM on how we intend to comply with these ratios, especially on the areas of building the share capital and the reserves. It's also our expectations that all our members will promptly fulfill their obligations to the society. I thank Mr. Elliott for the slides that he has learned of the behavior of members and how members behave. And thank you, Mr. Elliott, for clearly and succinctly educating our members on what is expected of them. And here, I'm also echoing what Eliud has said, to say that we're expecting all our members to promptly fulfill their obligations to the society when they fall due, to enable us update our records monthly, adhere and comply with all these regulations, failure to which we will be liable to pay to the authority punitive financial penalties, which will severely affect all of us. At the end of the day, we all expect that we're going to have a stable society that is professionally run, and that all of us as members, we are going to benefit from these regulations. Thank you very much. That is my update on the steps that we're taking, where we are, and what is expected of us. I would like to take this opportunity to invite Mr. Njoroge, who is our supervisor from the State Department of Cooperatives. He can give some few remarks. Over to you, Mr. Njoroge. Mr. Njoroge, you are on mute. Unmute your mic.
Oh, thank you. I had tried the same, but it was not unmuting, but at least now I can see it's okay. For the membership of Kanisa SACCO, I'm Njoroge Mwangi, cooperative officer representing the government. I'm happy that members have been taken through this education session so that they can be able to understand the issues that are there in the cooperative movement. However much you are talking about regulation of cooperatives through these regulations of the non-duty SACCOs, members need to play their part, because SASRA will come to regulate societies. However, maybe I would like to comment on this issue that cooperatives is a devolved function in the Constitution of Kenya. However, the supervision of cooperatives will not go to SASRA in such a way that everything will be taken by SASRA. It is only the regulation part of cooperatives, only the SACCOs which have been categorized as per the presentation, the non-duty SACCOs. These are the SACCOs with 100 million of deposits and above. So only those SACCOs which will go to SASRA in terms of regulation, not the supervision part. Only ensuring, SASRA will only ensure that you are able to achieve all those requirements that you have been taken through. But all the rest still remains with the Department for Cooperatives, because cooperatives, as you understand, is a devolved function. So at the county level, we need to continue supervising cooperatives. We have to continue working together. And this is all to ensure that members are able to get value for their money. We are able to make follow-ups of the board members whom you have elected. It therefore means, as members of the society, you still need to continue playing your part. However much we are saying that you will be regulated by SASRA, members needs to play the major part. However much you are regulated, that doesn't mean that the SACCO cannot go under. It depends with how are members performing their duties, how are members performing their responsibilities. We are considering the issue of the capital adequacy requirements, and we are talking of that we need to increase the share capital of the society. This is where we need to ensure that we are recruiting more members in the society. And as recruitment of members continues, or as we recruit more members, we are informed that each member needs to do the recruitment. what kind of a member are you recruiting, so that that member can come and be part of Kanisa SACCO. This is the time that you need to consider not just a member, but quality members. Quality members are the ones, because you are considering, remember, we went through the issue of loan loss allowances. Once a member gets that loan, will that member be in a position to repay the loans as and when it falls due? Because we have the 5 categories that we were given. Even to the current members, we need to ask ourselves, where am I in terms of the loans that I'm paying to the society? Am I at the performing level, whereby all the loans are being repaid as and when they fall due? Am I at the watch level, substandard, doubtful, or loss? Because the percentage of loan losses will have to affect the return to members at the end of the year, because it will affect the turnover of the society. It will affect the income of the society. So this is where now we need to consider quality members, the quality of members who are joining the society. However much you are talking about increasing the share capital by recruiting more members, what kind of members are we recruiting? That is the only part that maybe I would caution members to ensure that you recruit quality members who will not come in once they are issued with loans. Then they will fall at the point where we are providing loan loss allowances so much. Remember the percentage that were given. So let us ensure that we recruit quality members who will come and add value to the society. So it therefore means, as we get into these regulations, members need to play their part. Whatever the board of directors request from the members, let the members ensure that they do as per what the board requires, because it is a requirement of these regulations. And we need to ensure that we abide with these regulations so that we are within the requirements of SACCO. So with that, Madam Chair, I believe that members are now very much informed. They will be able to support you in terms of these regulations to ensure that you achieve. I'm happy that you have taken steps to ensure that you comply with these requirements once these regulations once the effective date is given. I believe by that time, Kanisa SACCO will be one of the societies to ensure that you get that license. And I hope that license, now the behavior of members is the one to ensure that this license is issued on annual basis. It is renewed on annual basis, because once you are not able to achieve these requirements that SACCO requires, it means you will not be able to get that license. So let members perform their part to ensure that that license is renewed on annual basis, and that the society will continue performing its operations, and members will continue getting value for their money and the benefits that you expect from the society. Members still need to continue to ensure that they are saving in the society. They are saving as much as possible in the society, and they are able to get those loans. That is the benefit that members need to get from the society by saving more in the society and getting those loans. So with that, I believe members are now informed, and you will be able to work together. With information, they say that you have that power. You can be able to make the right decision. And I believe with that, the board members, the staff, and the members of the society are now working in the same path. And you will be able to achieve the objectives for which the society was formed. With that, Madam Chair, I say thank you for inviting me to this meeting, and I'm happy that now we are walking in the same path. Asanteni.
Thank you very much, Mr. Njoroge. Thank you for joining us and for always being there to provide us with your inputs from the ministry's perspective. We are grateful. And members, we are coming to the end of our meeting, and we apologize. We've gone overboard by 12 minutes, and we just have 1 or 2 last things to do, and then we call it a day. First of all, you can see the questions coming in on the chat. Some of you are asking, how soon are we going to come up with the policies that need to be developed? I think as a follow-up to what the chair has said, we have set for ourselves a deadline of end of November to be able to have completed all the preparatory processes that are required for application for compliance. James, you are saying that can qualified members help to draft policies so that the board just reviews? Please, if you feel you have some expertise there, please reach out to the office and we'll see how we can engage you. But we are not promising you that we are going to give you the job, but this is our society and your inputs will be very useful to all of us. Yeah, I see a couple of issues about loaning during the COVID pandemic. As you've been updated in our various updates by the chair to the members, we continuously review the situation and how it's impacting members and provide guidance as and when we see the situation has changed. So please, if you have any inquiries in relations to loaning, please just reach out to the office and we'll be able to give you that information. Same to access to the portal and the mobile app. If you're having any challenges, please reach out to info@kanisa-sacco.org or call the office line and you'll be assisted. Otherwise, thank you very much. So our last thing will be a poll, a very quick poll to evaluate these sessions. So I'll request you to pick your phones. If you're using your phone or if you're on your computer, you'll see a question pop on your screen. So you have some questions popping in on the screen. So just select one answer. Can you see? A question should pop up on your screens. Can you see? Yes, please just submit your answers. So tell us, what did you like most about the session? We have 3 questions. What did you like most about the session? What did you not like? And then number 3 is, how would you rate the organization and delivery of the session? So just submit your answers. Just giving you a few minutes. We have 30 people so far responded. Okay, please keep them coming. We have 44 people who have responded. 46. Okay, keep them coming, keep them coming. Keep your answers coming. Giving you a few more minutes. Okay. 52 members have voted. Yeah, we can have a bit more. Okay, we are ending the poll in 10 seconds. 8, 7, 6, 5, 4, 3, 2, 1, 0. So we're going to end the poll now. Thank you for those who have submitted your answers. So at 68% having voted or rather polled. Okay, so sharing with you the results, you should be able to see what your feelings about the session have been. So majority of you say that you like the content, and I could see this from the chat. People are saying it's very informative, very insightful, so we are glad. Then the facilitator at 6% and the platform used at 13%. Thank you for that. And then the others. The second question is, what did you not like most? So the timing appears to have been the most disliked thing. So we'll try and see. We'll send you a more detailed evaluation later on to try and find out what will work best for you. The duration coming in at 26%, and then content at 9%, and the platform at 11%. Yeah, I could see some people had challenges connecting, but that's those are things we can gradually address as we go along. And then in overall, how will you rate the organization and delivery of the session? Majority of you at 65% say the session was very good, which is a positive. Thank you for that. And then 31% saying it was good. So, and then 4% saying it was fairly organized. So thank you very much for those, for taking time to conduct those that evaluation, and for taking time to join us during this meeting. We are going to continue engaging you as we walk together on the path of ensuring that we become compliant, and together we contribute towards strengthening our society and making it a better SACCO that we can all be proud of. So thank you very much, ladies and gentlemen, and wishing you a very pleasant afternoon and a nice weekend. Thank you. Bye. Thank you for joining us. We really appreciate it.